Now we have Bitcoin though, right? And Bitcoin can serve both of those purposes at the same time. You don't have to bifurcate them between this store of value and medium of exchange. The biggest difference though in going to a Bitcoin company versus any other company, whether it's small or some other like big corporate, is just the passion that people have around the thing that they're working on. And if you own Bitcoin and that is your primary savings vehicle, you can make yourself immune to the vulnerabilities that are built into the fiat financial understanding system. That the monetary system is broken and that you can't just save your money, you have to invest it. That's where all of my monetary energy should be going, right? Like that is the apex predator of financial assets and the premier store of value. Why would I continue buying stocks? Like I should just be buying Bitcoin.
Guys, welcome back to another show. Today I'm here with Trey, which is VP of Sales for Unchained. How you doing, man?
I'm doing great. It's all-time high day. How can we not have fun with this?
And Pizza Day.
And pizza day, all-time high on pizza day. I'm starting to get hungry just thinking about it.
As always, in the description you will find Trey details. You must subscribe to his newsletter, right? Congrats on the 1,000 subscribers.
Yeah, thank you. It's growing pretty quickly.
Super happy to know so. But before we dive into it, do you mind to give us an intro and tell us a little bit about yourself?
Yeah, well, I have been a Bitcoiner for quite a while. I first heard about Bitcoin in like 2011 and didn't, quite do the intellectual work to understand exactly what it was and why I should be like going way out of my way to buy it at $10 back then or whatever. But I first bought a little in 2014 when it became a little bit easier to buy on Coinbase back then. I still didn't know what I was buying and what I was doing there. So it took me still yet another few years to actually start dollar cost averaging and pushing in a lot more of my personal capital into that direction. But I came from the traditional finance and banking world, and worked for some very large companies: Goldman Sachs, Deloitte Consulting in the technology practice, MetLife, and then prior to my role at Unchained, where I'm a VP of sales over there, I was at a bank called Truist, which is about the sixth largest bank in the US now after a merger between two smaller regional banks, SunTrust and BB&T. So I was at SunTrust at the time of that merger. I was doing like risk and P&L work on the capital markets trading floor, focused mainly on the cash side of the business, which is equities and bonds, agency bonds, mortgages, like that kind of thing, and a little bit of derivatives works in FX and that side of the business. But I have a pretty deep understanding of capital markets. I kind of became the Bitcoin guy at the bank in 2019, 2020, 2021. And that led to some presentations given around Bitcoin for bankers and that kind of thing. And then was asked to join a crypto working group that they had formed in 2021 as the Bitcoin subject matter expert. I've always pretty much been a Bitcoin maxi and very much focused on that. Although, we all do a little bit of that horseshoe thing. So I'm no different there. But that was a really great experience and honor to be able to kind of help these very high level executives who were reporting to the board of directors of a massive bank, help them understand what Bitcoin is and why it's important and why they should be thinking about it and all of that. And then, I got an opportunity to work in Bitcoin at Unchained, and I've been here for a little over 3 years. And then just recently, since we're talking about the newsletter, I started this newsletter back in August of last year. And so it's starting to pick up speed in terms of subscribers and that kind of thing. But it focuses on financial independence and Bitcoin and where those two communities intersect. There's a community called the FIRE movement. It stands for Financial Independence, Retire Early. And it's something that I had subscribed to back in, call it 2018, 2019, similar to the time that I started like really understanding Bitcoin. I wasn't like deeply in love with my job at the bank. So, it was like, oh, I found this very intentional strategy where I can just maximize my savings, be very intentional about my spending, plow it into the stock market at the time, like before I really understood Bitcoin. And I'm going to pull my retirement date forward by like 20 years, right? Like by 45, I'm done and I'm going to go play golf and I'm not going to do anything, in terms of work anymore. Like I'm just going to enjoy life and travel and do all this kind of thing. And then when I reached this understanding of Bitcoin that I have now and this conviction in it, I kind of realized, well, that's where all of my monetary energy should be going, right? Like that is the apex predator of financial assets and the premier store of value. Why would I continue buying stocks? Like I should just be buying Bitcoin. So I made kind of like hard pivot toward putting all of my excess cash flows, all of my DCA, and all of that kind of thing toward Bitcoin. And then that whole strategy of the fire movement versus Bitcoin and the overlaps they have in terms of low time preference and just understanding that the monetary system is broken and that you can't just save your money, you have to invest it. That overlap led to what is now the newsletter, which was kicked off from a post that I put out back in March of 23, I think it was, called Bitcoin is Fire Friendly. And it was meant to just try to educate the fire community on why Bitcoin should be a part of their portfolio, why these overlaps exist, and what it can do for them in terms of taking advantage of the asymmetric upside that Bitcoin has to accelerate their financial independence journey, but really also bring sovereignty to the plan that they have in place. You know, like the current fire movement is built on the fiat financial system, and it's very vulnerable to permissioned accounts and the decision making of the people in charge as to whether or not you can access your money and what the inflation rate is going to be and all these kind of things. And if you own Bitcoin and that is your primary savings vehicle, you can make yourself immune to the vulnerabilities that are built into the fiat financial system. And so that's what the newsletter focuses on. It's helping Bitcoiners to understand the importance of having a plan and going after a an intentional way of spending, because we all have to spend. We should definitely talk about that, because I know you just had a recent video on spending, but then also just like putting a framework around how you are planning for the next phase of life after you have come into so much wealth that Bitcoin will provide for you if you are intentional about saving it and stacking sats in the appropriate manner. And then on the flip side, helping the FIRE community, helping people who are interested in personal finance and financial independence to understand Bitcoin better so that they can incorporate it into their plan and gain all of those benefits around the asymmetric upside and the acceleration that it can provide to them, as well as all of the sovereignty benefits that I was just touching on there. So that's kind of the overview of where I came from, where I'm at, and what I've been focusing on recently is building Unchained and helping plan for succession, and then also building this newsletter around financial independence and Bitcoin.
You said so many good things there. First of all, I wanted to ask you, coming from traditional finance, what was the biggest difference you found in working for a Bitcoin company?
All of the companies that I had worked for in the past were big companies, big corporate structures, and all of that. So, regardless of whether it's a Bitcoin company that I was going to or any other like small kind of startup company, there's a huge difference in culture there. The biggest difference, though, in going to a Bitcoin company versus any other company, whether it's small or some other like big corporate, is just the passion that people have around the thing that they're working on, right? Like you go to a company like Unchained and you're working with incredibly smart people, like super sharp. They know, they've got great experience and great knowledge about like the function that they're doing there. They're also super passionate Bitcoiners, and they understand Bitcoin as a monetary asset. They understand the technical underpinnings of how it works, and we're all working toward this shared goal that we're all very passionate about, which is bringing Bitcoin to the world as the next global money, and making it easy for people to take full control over it and actually bring it into their lives in a way that works for them, so that they get the benefits that Bitcoin offers in a way that's very sustainable, and where they can sleep at night and plan for the future generations and plan for their fire exit from the fiat world, right? So that alignment in passion, that alignment in the end goal of what we're all working for is super invigorating, right? It's very invigorating to be around these people that are all, they see the world in the same way that you do. If you are coming from any other like normal company out there, you probably don't have this underpinning or undertone of passion about what you're doing, right? Like I worked at banks, I worked at large financial institutions. There's some passion there because people like you're interested in markets and you're interested, there's always something going on there. But do people really like in their core care about the outcome of what happens to the company and to the fiat financial world and all this kind of thing? I mean, absolutely not, right? So that's really the biggest difference, and it's so nice to be able to be around these people who have passion, who share those same goals, and not have to kind of go in and pretend like you care every day.
Bitcoiners are specifically passionate, so an extra layer right there. I wanted to ask you something though. So Bitcoin is a store of value, is a currency. Where do you pinpoint it?
I just think of it as money. It certainly is a store of value. Money is primarily a store of value and medium of exchange, like intertwined. You can't separate one from the other. Like if you've got a store of value, but you can't somehow get anything out of that value, it's kind of locked away from you, then what's the point here, right? Bitcoin just kind of merges the positive aspects of gold that has been used as store of value and the positive aspects of fiat money, which operates at a much higher frequency than gold was able to. And I really view like the dollar and fiat currencies as a necessary bridge between old sound money and new sound money, which is Bitcoin. We needed to be able to bridge the gap as the world accelerated in terms of the communication mechanisms that we've had across the world. The need to conduct trade across much larger distances and at much higher frequency. And so we didn't have the internet when fiat money kind of arose, but we did start to have a communication mechanism that would allow for credit-based money, which is what fiat money actually is at this time in this day and age. And so allowing us to continue to make progress as a society, as a global population, and continue to develop the capital stock and build systems that would otherwise be hampered perhaps by not being able to move money as quickly as we're able to move trade, was really necessary in my mind. So like I view fiat money as like there's certainly some evil aspects of it, or some downstream implications that are very much untoward and not good. But the core mechanism of it actually solved a very serious and crucial problem for the world to be able to continue with that progression of growing the capital stock and growing the economy and lifting people out of poverty, which has been going on, now for hundreds of years since the Enlightenment and industrialization and that kind of thing. Now we have Bitcoin though, right? And Bitcoin can serve both of those purposes at the same time. You don't have to bifurcate them between this store of value and the medium of exchange. You can store your value in Bitcoin, and then you can also just send it across the world, zip it at the speed of light whenever you need to actually transmit that value over space. So you can store your value over time. You can transmit it over space. Those are the core problems that we need to solve when we're thinking about a monetary system and a way of communicating value across continents and across businesses and across different people and their different view of time preferences. And Bitcoin fits the bill perfectly there. So that's how I think about Bitcoin. I don't think you can extricate these two different properties. They're very much intertwined.
And also, I would argue before you start exchanging something, you have to decide it has value. So you go from, okay, this thing is valuable. Now that I acknowledge that and we acknowledge it, how are we going to exchange it?
People tend to think about this in like a linear way, and that's just not at all how this adoption process works. People are very focused on, okay, you've got store of value and then medium of exchange, and then after people are exchanging it, then they start pricing things and it becomes a unit of account. I actually think that first of all, these all are interplaying upon one another, but the unit of account piece really, I think, drives medium of exchange more than the other way around. Or at least I'm toying with this idea that is the case, which is that in order for somebody to want to price their goods and accept Bitcoin for the goods and services that they're providing, they need to value it. So they need to view it as a store of value. And then when it comes to like unit of account, they need to be thinking about the opportunity cost of having less Bitcoin versus more, right? And when you start thinking about the opportunity cost of the spending that you're doing, of the way that you're operating your business, that is a shift into unit of account and using Bitcoin as the denominator for the way that you think about value. Once you make that shift, now you're much more willing to say, okay, I want to accept it for the goods and services that I'm providing to the economy. And if you're willing to accept it, then it's going to drive more of an impulse in other people to want to spend it. And we're kind of seeing that in the Steak and Shake example. I don't think you have Steak and Shake in Dubai,
No.
but we have it here in southeast US. And they came out and like signaled to the world, hey, we're aligned with the values of Bitcoin. We recognize it as something that we want to accept. And we're going to go out of our way to signal that to the market, signal that to Bitcoiners, and drive the medium of exchange functionality that Bitcoin can serve. And so, of course, this all feeds on itself, right? Like as soon as people then start using it as a medium of exchange, more people see that it's valuable in that function, and then more people are also willing to think about accepting it. So this interplay here is super important. There's no way you should be thinking about this on like a linear progression type of standpoint.
When everything you have is in Bitcoin, you will be way more careful in spending it. Can I wait a little bit more, or can I just be more careful on what I'm spending into? So it forces you to take a different approach when it comes to spending, right? So, like you mentioned, the opportunity cost is there. You choose every single day to spend fiat in things in which you could buy Bitcoin with. So it's the same thing.
Exactly right. That is the key point. You're hitting on it exactly. The opportunity cost is not that you're spending Bitcoin. The opportunity cost is that you're spending at all, because anything that you spend is value that you could have saved in Bitcoin. So and this brings us kind of back in line with the FIRE movement, which is traditionally like very frugal and very intentional about the expenses that they have, because they approach this methodology with saying, okay, we're going to tighten up our expenses. We're only going to spend on things that actually add value to our lives. Some people take that way too far, by the way. They're like living in a cardboard box and eating rice and beans and saying, okay, I only spend $20,000 a year, so I can retire with $500,000 and I'm good to go. Do not subscribe to that. But they're hitting on an important point, which is that anything that you spend could have been saved, and anything that you spend that could have been saved, if you're not saving it in Bitcoin, you're giving up like so much upside and asymmetric opportunity there. And so whether you're spending dollars or whether you're spending Bitcoin, that's not the point. You can always replace the Bitcoin, and you should, right? Like if you only have Bitcoin, you're going to replace it either with income that you have or something like that. If you've got some fiat and mostly Bitcoin, you can choose to spend the fiat. That's fine, I guess. But like, or you could choose to spend the Bitcoin and replace the fiat, or replace it with new fiat. You still have value that has gone away from you that you have not saved anymore, right? But if you're spending your Bitcoin and then replacing it, that is better in my mind, because you're now supporting this mechanism of using Bitcoin as not only just a store of value, but also as that medium of exchange, helping a place like Steak and Shake to start to value, storing Bitcoin and think about it as a unit of account. You're driving Bitcoin adoption by spending it. So this is really like a very important point that you're making, which is that the opportunity cost is spending itself. It is not what you're spending. The medium that you're spending doesn't matter. It's the fact that you're spending at all.
And it's going to force you to then think even larger, which is something also I wanted to ask you, because whenever you are plugged into the Bitcoin standard, then I don't want to jinx it, but so far we've seen those 4-year cycles where Bitcoin goes up, it goes down, it corrects, it goes sideways. I don't know, if you do the same, if you have a portion of your portfolio that you strategically kind of plan, not to catch the top and or the bottom, because we know it's impossible, but to kind of strategically place yourself in the market. And also, which is connected to the other question I wanted to ask you, do you think we still have cycles coming forward? Because these two, they kind of go together.
We were talking about earlier, what it's like to work at Unchained and the passion and all that kind of thing. I'm still in accumulation phase, not because I necessarily need to be, just because I love what I'm doing. And so why would I stop doing that? Which means that I have income and I'm able to fund my lifestyle with that income. So I don't need to be selling any Bitcoin to pay for my current lifestyle, because I have that income that's coming in. And so like, yes, I've reached financial independence. I've like hit that number. That's great. But I don't really have to think about like timing cycles or anything. I don't think I would do that. Even if that were the case, if I was like completely retired, not working, had no income, the best way to think about divesting of your assets to fund your lifestyle, in my mind, is to hold as much Bitcoin as you can and then sell it down as and when you need the expenses. Like you still should be making sure that you are aware of what your expenses look like and what the cost of your living is, so that you can keep that in congruence with the portfolio that you've got. But you're not going to be very successful at trying to time the market anyway. The fire approach is to never time the market. You go through this accumulation phase and then you go through a distribution phase when you have retired, so to speak, and you're starting to sell down your portfolio. And doing that is actually tax efficient, not tax advice, but it is more tax efficient. And it allows you to maintain as much exposure to this asset that's going up, by hundreds of percent on a yearly basis, maybe 50%, whatever. It's outperforming everything else. It allows you to maximize your exposure there while still being able to fund your lifestyle. And you're never going to run out of money as long as you've kind of done the math in the appropriate manner. So that's how I think about it. That's how I approach it. That's how the fire community approaches it, by the way. They just do it with a different set of assets, which is primarily stock market index funds and that kind of thing. 4-year cycle, man, it's so hard to tell. Like, people have been saying for so long that like, oh, the cycles are dead. This is different. So far, it's not different. We're kind of like making new highs and pushing to new blue sky territory here, kind of right on time. Will we see as much appreciation over the next year, like in accordance with the way that the cycles have played out previously? I don't know. Maybe it could be way more than what we saw last cycle, and so you never really know. What I do know is that adoption is accelerating. And we're seeing acceleration in the acceleration of adoption. Like things are feeding on itself. There's this flywheel that's happening where we've gone from the government will ban it to the government will buy it. We've gone from like most people not knowing what Bitcoin is or anything about it to everybody at least having heard of Bitcoin, pretty much knows what it is. They may or may not own any. Most likely, in fact, the vast majority of people don't own any, or if they do, it's just like a very small amount that's not meaningful in any way. But when like we continue to go higher, when this inevitable like rise in the purchasing power of Bitcoin happens, it will push more people to move more quickly into allocating some capital to it. And that feeds on itself as well, right? So we have this like reflexivity built into Bitcoin adoption cycles, and that's starting to pick up speed. We're starting to see what that looks like in real time, which is really fascinating to watch. All of these different cohorts and contingents of people finally discovering Bitcoin and figuring out that they should be paying attention, that they should be allocating a little bit to it, and that reflexivity could lead to just massive price increases. No predictions or anything, but I think it's just as likely that we accelerate in terms of price on the upside from here as we just continue to have maybe lower amounts of volatility going forward. I think I'm really a fan of that S curve adoption in terms of the price here, and we're kind of just at the base where it starts turning up in terms of the price. That's what I think. We'll see what comes to play.
Sometimes people ask me, how do you deal with the volatility? Bitcoin is too volatile. I'm like, well, fiat is volatile too, but you don't see it because the number on your bank account is the same. If you have $100,000 for 10 years in your bank account, it's still 100,000 is the purchasing power, and shrinkflation, by the way, twice. So first, the product is getting smaller, and also your purchasing power is going down. So you don't feel it, but it is there anyway. It's not as violent as it was with Bitcoin, for example, 80% corrections, even though I would argue I don't think we will see them anymore. Are we going to correct? Absolutely, yes. As much? I don't think so. I don't think we'll see a 90% correction. I mean, not unless we go up super fast to $1 million. Well, then maybe, okay, we'll correct fast. But I don't think that's going to happen either.
It's funny you mentioned volatility, and the traditional way to manage volatility in a portfolio is to have a smaller position size, right? If something has more volatility, you have less exposure to it, and therefore the total amount of the portfolio that is swinging is going to be less, right? And you kind of normalize based on that. I think about it slightly differently, which is kind of the exact opposite. You don't have to worry about the volatility if you have a bigger portfolio. So you should be stacking as much as possible and build that portfolio as high as it can possibly go. And then even if you get 50% drawdowns or 80% drawdowns or whatever, you still have enough because you've built a stronger or bigger base.
And like you said earlier about the FOMO in the companies, all we need is like 2%. That's it. We don't even need people like me and you where we are super into it, like plugged in, like living off Bitcoin, or even a small percentage of the corporation saying, you know what, I'm just going to put 2% there and see what happens.
Yeah, and your point about volatility is really something that that Bitcoiners and just people more generally can learn from the FIRE movement, which is that the approach there is you build this portfolio, you basically ignore the price of these indexes that you're buying. You're buying on the way up, you're buying on the way down. You are when you get to that FIRE number, you built this portfolio large enough that it takes care of itself regardless of what happens in the market. Now, there is such a thing as what's called sequence of returns risk, which means if you retire in 2008, right before an 80% crash, the number that you've saved up for is going to buy you a whole lot less because now all of a sudden, right in the very beginning of your retirement, you're having to sell down a much larger portion of the portfolio. That still exists in Bitcoin. That still exists with any asset that you would be retiring with or whatever. But over the long term, and if you survive those first couple of years, the cyclicality of the markets, the consistent returns that it provides will take care of that volatility. And so you shouldn't actually be worrying about it. You shouldn't be thinking in terms of days and weeks and months. You should be thinking in terms of 5 years and 10 years out, and letting the natural market cycles play out without getting stressed out about it.
Buy low, borrow high, and sell never, right? Which is better than buy low and sell high because you don't want to sell the winners, right? Like we all say
Buy,
on
borrow, die, right?
exactly. With Bitcoin, it's a bit more complicated, but I've seen you guys have a product. You actually offer loans on Bitcoin. Do you mind explaining us how they work?
Sure. Well, we serve primarily U.S. clients. In fact, we are not onboarding any clients outside of the U.S. So all of this kind of just applies to people who are in the U.S. What we offer in terms of Bitcoin-backed loans are commercial loans to entities for business or investment purposes, which means if you've got, you can't like use the proceeds of the loan to remodel your primary residence kitchen or something like that. But if you're building a business, if you're making some other investment, that is likely a valid use of proceeds for those loans. And Unchained was kind of founded with this product back in 2017. It was very popular, and we built this business kind of based off of this product, and then pivoted into saying, okay, well, the custody aspect that we were providing, which is collaborative custody for the collateral for these loans, is actually very valuable for people to just store their value in Bitcoin in a way that is fault tolerant, is resistant to mistakes, and that has some succession planning elements in mind there. So that's kind of the core of our business. And then we wrap all of these other financial services built around that collaborative custody model. And our commercial loans, our Bitcoin-backed loans, are no different. So we keep our clients as close to their collateral as possible, and closer than anybody else on the planet who is offering some type of credit based off of Bitcoin-backed collateral. And the way that we do that is through collaborative custody. Our clients hold one key, Unchained holds a second key, and then there's a third-party key agent that holds a third key in a 2 of 3 collaborative custody vault. And what that means from a practical standpoint is that when you are collateralizing your commercial loan, you are sending Bitcoin into a multi-signature vault where you can verify cryptographically that the Bitcoin is there, that it's segregated, it hasn't been commingled, it hasn't been sent anywhere, and very importantly, we do not rehypothecate. Right, the collateral is sitting there purely to back the loan that you've got. And that will give you the greatest assurances that you can ask for, that you're going to get the Bitcoin back at the end of that loan term, right? Assuming the market hasn't moved against you, and you haven't defaulted on the loan, or something like that. Minimizing the counterparty risk to the lowest level possible, and keeping you super close to that collateral so that you can verify that it's not being put at excess risk that you are unable to see. And a lot of people fell victim to this in 2021 and 2022 with the likes of BlockFi and Celsius and Voyager and some of these other lenders that are out there, that you were basically sending your Bitcoin into a black box, and you have no idea what risk they're exposing it to. There's tons and tons of counterparty risk. Yeah, you're paying a lower interest rate on that, but turned out that lower interest rate you should multiply by like 10, because you lost your entire stack because the company went bankrupt, right? That's how we approach it. It's a super popular product, as the universe, as the globe, as Wall Street, and just people generally speaking understand Bitcoin better, understand it as a collateral asset. There's going to be more and more liquidity that comes into the space, and more financial options for people, whether it's for business or personal purposes or whatever, that are able to come to market and help people bridge between the fiat world and the Bitcoin world that are kind of running parallel right now. And so it's going to be exciting to see what people come up with, and different ways that they're able to interact across these different worlds.
I have the same feeling. I think traditional finance is about to, they smell it and they go, oh, okay, we can make a lot of money here. Because when you think about traditional banking, for example, as we say all the time, it's not money, it's not in the bank, it's not yours. It's kind of the same model. So you deposit some fiat and you think, oh, it's in there, but they do God knows what with it. The space is maturing to a point where it's getting interesting to think about, for example, a retirement plan. And I know some people are saying the best is cold storage. Yes, it is, but it's very hard. You know, people say, oh, it's only 24 words. It's not, because where do you store them? What happens if you get hit by a bus?
It's very simple in theory and very complicated in practice to actually secure a substantial amount of Bitcoin over the course of your life and be able to have it in a very good position for succession planning. That is kind of at the core of the conversations that I'm having on a day-to-day basis with current clients and with people who are looking at Unchained as a potential solution for them to help them secure Bitcoin. Is, there's two questions that everybody has when you get to a place where you've got material amount of Bitcoin. How do I not lose it? How do I pass it down to my family, right? And so we focus a lot on those two questions in building products, and really building a service around making sure that people feel comfortable and confident in the security setup that they've got, that they can't just make one mistake and lose their Bitcoin, but that they also have a plan in place to pass it down to their family as and when something happens to them. Bitcoiners think in generational terms. We don't think in terms of the next quarter, and this is not a trade for us, right? And the longer you've been in Bitcoin, the more that is true. And so when you think about securing the asset, you need to be thinking much longer term than the next 10 years. And you need to be building that sovereignty into the model that you've got for owning the Bitcoin. So, it's not enough to just say, okay, I've got Bitcoin and I'm going to just trust my custodian with it. If you really want the full benefits of what Bitcoin has to offer, you need to take control over it. You want to find the right balance of making sure that you stay in unilateral control, full control over the Bitcoin, but that you also have pathways to help your family to get access to it if something were to happen to you. And so that's the balance that we strike. That's what we focus on doing for our clients. And then, bridging the gap between, as I said, the fiat world and the Bitcoin world in terms of the financial services that we're able to offer.
Whatever is one Bitcoin today, which we're talking about $100,000, in 10 years might be $1 million.
People feel this, and then what they a lot of times will do is they start building systems that are very complex and very brittle, only make them feel good because they don't understand the hidden risks that are involved, or the hidden brittleness that is involved in the setup that they've conjured up, right? And so it's really important that you get this right. So that's what we try to help our clients to get to.
Exactly. And the worst thing that can happen, and it happened, I've seen it before, that you build such a complicated plan that you forget about the plan yourself.
Or it works great while you're alive because you understand it and you know all this, but it becomes this like super stressful maybe unrecoverable treasure hunt that your family has to go on to be able to get access to this Bitcoin.
Last question I wanted to ask you: do you do
Sure.
anything else besides Bitcoin? Do you do, I don't know, stock? I guess now we could say MSTR, MSTY, or gold.
So I still do have some stocks that are kind of left over from my pre-Bitcoin days that I just never sold and bought Bitcoin. I should have, but there are a lot of nuances to that as you're going through that transition, and as you are a married man and all those kinds of things, right? Like there's other considerations there. So my current cash flows and for a very long time and all excess cash goes toward Bitcoin, but I do have some leftover stocks from that previous era. I do own some MicroStrategy and I do own some MSTY, really more of an experiment there than anything. I expect over time that, and over the very long term, that MicroStrategy will underperform Bitcoin, but that's a very long time frame. And so I have these in some accounts that I have no ability to move into actual Bitcoin. Unchained has an IRA product, by the way, and you can hold your own keys within this IRA and this collaborative custody model. So if you've got that, like that's definitely something worth considering if you want Bitcoin exposure within a retirement account. So feel free to come talk to us about that. But if you've got retirement accounts that have access to the ETF or to MicroStrategy or whatever, and you have no ability to roll it, maybe that's the next best thing. So that's the way that I think about those things. I used to have gold. I sold all that for Bitcoin.
About a month ago, I tampered into MSTY as an experiment. And I have to say, like the first payment came through and I was like, damn, I don't know what's going to happen in the bear market with that one. But as long as there's volatility, technically, we should get paid. That's going to be an interesting one to figure it out for sure.
Yeah, for sure. I mean, I still think like if you're looking at MicroStrategy versus MSTY, you're still better off owning MicroStrategy over the long term, because it will MSTY will not outperform MicroStrategy on a total return basis. I don't think, and so this is like similar to the way that the FIRE community typically thinks about these things, which is that you shouldn't go for dividends. You should go for the highest total return that you can get, in a risk adjusted way, which is why they talk about, stock market index funds and that kind of thing, and build this portfolio so that you can actually start selling down from that. And it's okay to create income from selling the principal. It's okay to do that. The system is built, the FIRE system is built to be able to do that. And you're going to minimize your taxes, you're going to minimize drag, and you're going to be able to still live off of that income that's generated from selling down. You're getting income in the here and now through MSTY, but that always comes at a trade-off or a cost of basically decapitalizing that business, right? Like you'll notice anytime that they pay that dividend out, the value of the stock drops by basically exactly that amount, right? Because you're pulling that amount out. But now you also have a tax burden on that income, and there's a whole lot of other considerations there. Not to mention the risks that you're talking about how is volatility going to go? Are you going to underperform on the upside because MSTR just like went through the roof and you're capped in terms of the upside when you have MISTY because they're selling calls against these positions? There's a whole lot of risks and nuances here that I don't think people fully understand, that I feel like I have a good grasp on because I come from the capital markets world and kind of understand how all these different vehicles work in probably a better way than a lot of people. But it is very easy to get caught up in the FOMO. That's for sure. I'm certainly not immune to it. I love watching how things develop in all of these different Bitcoin stock vehicles or whatever. The one thing that I would say is if you're going to play around with this, like, first of all, make sure that you have a Bitcoin bag first. Like that should be the vast majority of what you are holding. If you, understand how all this stuff works, and then make sure that you understand the premium that you're paying for these stocks. Make sure that you understand where that premium is that you're paying for MicroStrategy and some of these other like Bitcoin adjacent equities that are these Bitcoin treasury companies. Because over the long term, that premium that you're paying needs to be maintained or grow in order for you to outperform just buying Bitcoin directly and holding spot Bitcoin. And so if you're buying at too high of a premium, there's gonna naturally be this compression force on that on that MNAV or on that premium, and it's working against you. So you may be paying way too much for this. It's hard to know. You may be paying way too much for it, and you would have just been better off by just buying and holding spot Bitcoin and just being a little bit more patient.
Bit of controversial thought, but I feel like those products are becoming the coin of this cycle. Whether people, instead of buying Ethereum, they buy MSTY.
Which I have to love a little bit, right? Because at least that gets recycled into Bitcoin and is not going off into monkey JPEGs and whatever.
Bitcoin is my gig. Bitcoin is my money. Then if I
Yeah.
want to YOLO a 5% into something, okay, I'm already accepting the idea that it might go to zero, right? So that's important to be said, because, you know, sometimes people maybe are listening, oh, wow, I'm going to go all in MSTY or MSTR.
Yeah.
I agree with you, no financial advice, but what I'm doing at least is like, Bitcoin is my money. Then if I want to go to Vegas and gamble, which we will be in Vegas, by
Yeah,
the
we
way.
all like to gamble. We all like to gamble, man.
Exactly.
I'm no different in that regard. So you just got to make sure that you've got the plan in place that allows for you to play around with some of that stuff.
To mitigate the risk and forgive if you lose some money on the casino. Exactly. And speaking of Vegas, I'll see you there, Trey. Thank you so much, man. It's been fantastic having you on the show. I'm looking forward to having a drink and giving you some tips on Italy.
Absolutely. No, I can't wait. I'm super excited. Going to be great to meet you and see all the other Bitcoiners and friends and all of this stuff. You know, these conferences are so much fun, and it's really great to be able to hang out with like-minded people in these bigger stages. I'll be speaking. I'm hosting a panel with a few other great Bitcoiners on financial independence and Bitcoin on Wednesday morning. So I'm really excited to do that. We'll get into some juicy topics that I think are relevant to both Bitcoiners and FIRE practitioners. And then, it's just going to be a fantastic week.
Guys, if you need your ticket, remember there is a 10% discount in the description. So make sure to grab one and come and say hello. But Trey, thank you so much, man. I'll see you next week. I really appreciate having you on the show. Thank you. Thank you again.
Sounds good. Thank you.
Fantastic, guys. Thank you so much for watching. I will see you on the next one.